Good afternoon. This is Tom Alexander. This is the weekend report for Monday, March 17th. Today is Sunday, March 16th. It is about 3:30 p.m. Eastern Time in beautiful Charleston, South Carolina, as we head into the new week in the Globex session. Uh, Dramatic rally on Friday. Is it real or not? That remains to be seen. A couple of things to be aware of heading into next week. Next week is a big option expiration, a triple witch option expiration, which can have the tendency to create a lot of volatility, particularly as we get into the latter half of the week. This is a report that I do weekly. In case you happen to have found me for the first time, you can go to my website, alexandertrading.com, click on weekly update. It's free, and you can get this update. You can get all the charts I'm going to go through. You can download a PDF. You can also access the video, and you can do that for previous weeks as well, going back at least a couple of years. So if you're interested, go to my website, alexandertrading.com, and you can access all of this information for free. By the way, if you did not get a notice of this and you just found me through YouTube, I do send out notices if you are on my list. If you would like to get on my list, send me an email and say, please put me on your list. Tom at alexandertrading.com. I don't spam. I don't sell lists or send you 4,000 emails a day. Okay, let's take a look at the charts. Now, if you've been following me from week to week, or if you are a member, and I have a membership, and we do this update every single day in detail, like you're seeing here. I also have a live trade room if you're interested in that, et cetera. You can check that on the website. Okay, so I have been discussing the idea that we were way overdue for some sort of 3 to 5% rally. This decline, and I posted this time series for members. I may have done it last weekend, even in the weekly report. I don't remember, but we came within a day of bottoming in this series. It had been going on for about a year. Now, that's sort of coincidence. We'll see the importance of this low. I'm going to take this off for now. And at the last week's low at Thursday's cash session low, we were down about 10.5% from top tick to bottom tick. That's not close to close. That's top tick high to bottom tick. Since then, we've rallied a bit. We have not rallied even 3% yet, much less 5%. Those would be extremely normal rallies in a bull trend. I mean, a bear trend. Bull trend or bear trend for that matter. And we're not even close. Now, this could be a number of different things. I'll get into the past for this. The key reference areas, the potential quote unquote support and resistance areas are highlighted on the chart. And again, you can access these at the website if you want to review them. And if you want to download a PDF, I have these charts in the PDF. You can download those, print them out if you like. Okay, so let's take a look. That's the SPX. There are a couple of, let's just continue with the SPX here. There are a couple of other things I want to show here in the SPX. Let's go here. Now, this is a 30-minute chart of the SPX with breadth underneath and a couple of things here. Breadth expanded to its highest level since last January on Friday. Now, if this is an important low, what you should see is a steady rally with breadth hovering above zero, somewhere between zero and where it was on Friday. Doesn't have to exceed Friday, but you want to see in general that expanding breadth where it's persistently and consistently positive as we move higher. Now, I'll also point out we reached a minor key reference area on Friday. So, it's going to be interesting to see in Globex and then early in the cash session. If that was it, we're going to rotate back down. Now, I want to show this view. This is the market profile view. I'm going to split this out. This is last week's trade. So each profile unit here is one day of trade: Monday, Tuesday, Wednesday, Thursday, Friday. But what this is, it's all an auction. Okay. Every day is an auction, and there are auctions within auctions. And we're always trying to identify market condition. There are two basic market conditions. There's an initiative or trend, and then there's balance. The market spends most of its time in balance. Even within trends, it spends most of its time in balance. And I won't get into the weeds there, but trust me. So what we had last week, we had a balance area that formed. So if you take Monday and Tuesday and Wednesday and Thursday and Friday and combine it into the one auction that it really was, this is what it looks like. And this is the high volume node right here. And this is where we closed on Friday. So we did nothing last week except follow this three-step auction market process where you have a trend, you have a stopping price, and you have development around that price. That's exactly what we have here. Okay. Now we're still in this balance area. So, and we also have this market, as I showed you on the previous chart, that has reached a minor upper key reference area. So are we going to stay in balance for another day or two before we break out? Remains to be seen. Now let's go up in time frame and look at this perspective from here. And I'm going to take some of this off. So basically what we had coming into this month, we had a 3-month balance area that formed, right? And now it looks like we're trying to create a lower trend. We had a 3 months balance area. So this has the potential to be the beginning of a much more significant move lower from a longer term perspective. Shorter, we'll take it one step at a time, which is what I do on a day-to-day basis. And I keep you updated on a weekly basis, certainly. So but that's where we are from a bigger picture perspective. Okay, let's get back into some of the other indices now and take a look. Let's see. Let me go back over here. All right, since we landed, let's go to here. This has all of them. Okay. Equal weight S&P that I've been showing that I like to show because the moves into and through this last decline have been exacerbated by 7 stocks, the Magnificent Seven. And the SPX and NDX were relatively stronger because of those stocks. Now the SPX and NDX are relatively weaker because of those stocks. This is the equal weight S&P, and you can see it is down as well. Now it has made a lower low and a lower high, which tells you the trend is down. I mean, that's the most simple way to identify a trend in any time frame, whether you're trading on a 1-minute chart, a 5-minute chart, a 30-minute chart, daily chart, a weekly chart, etc. If a market is making any market you trade, any stock that you trade, if a market is making lower lows, lower highs, the trend is down. It's making higher highs and higher lows, the trend is up. Now you can have counter trends within larger degree trends, et cetera, and hopefully you understand how that works. And again, the key reference areas for these charts that I'm showing you here, the quote unquote support resistance areas, from an auction market perspective, you can find on the website and in the PDF if you choose to download it. Okay, so that's the equal weight S&P. Let's take a look at the NDX. And here's the NDX. Now, the NDX and SPX are in identical positions from a structural perspective. The NDX is down almost 14% from top tick to bottom tick into Thursday's low. And then if we take a look at the Dow, here's the Dow. The Dow bottomed Thursday in the middle of nowhere. Maybe there's a magic number here. I don't use magic numbers, but from an auction market perspective, the Dow just stopped on a dime, and that happens. Okay, let's look at the Russell and Mr. Russell. Now, the Russell did bottom just a tick below this level here, this key reference area. This is, and notice, the levels that I highlight are market levels. They're market levels that are determined by actions of the buyer and the seller, which are relevant. It means something when an area is rejected or when there's a spike away from an area or into an area. And that's what we have here. And that's why I have it highlighted. And then back to the upside, there's some volume in here and some closes and some highs. So that's why this area is highlighted back to the upside. Okay, let's take a look at New York Composite. Similar situation, New York Composite spiked into a previous area that had been rejected twice. Also, it's an area from where this market launched back in last September. And then back to the upside, here's the upper key reference area. And let's take a look at the internals here for a minute. Okay, I'll come back to this. I'm looking for VIX first. Now, VIX has been hovering above 20, and you hear a lot of chatter about the idea, well, VIX is above 20. This is when bottoms are forming. Well, maybe not, because VIX can get a whole lot higher than 20, and it can stay above 20 for a long time. Here we go. So this was, if we're in a true bear market or a bear trend, we'll see 30 VIX. So 20, high is a relative term. So be careful with that. All right, let's take a look at breadth real quickly. And the NYSE data that I use, which is NYSE advancing and NYSE declining issues. The red is a 10-day moving average of NYSE advancing issues. Green is a 5-day moving average of NYSE advancing issues. The blue histogram is closing breadth. And the 10-day moving average of NYSE advancing issues reached a level from where you quite often find at least pretty sound short-term lows. Remains to be seen. However, we didn't really reach an extreme. Also, we have not really had a big washout, and we haven't had a negative 2,000 breadth reading since middle of December. And it's a little unusual for market to decline this much, the moving average of NYSE 10-day moving average to decline this much without some sort of washout in breadth. But it's been a funky market, so that in a way it sort of fits. Okay, guys, let's see what happens this week. Reminder again, it's triple witching. Be careful, especially towards the end of the week. We're in the June contract now. You guys have a great weekend. And by the way, if you found value in this, please like and subscribe. I'll talk with you again soon.